Hello, everyone, and welcome to another edition of the Smart Investor Podcast, your guide to higher profits with less risk in any economic environment. In this episode, we're going to take a look at the markets in general. It's Monday morning. We're going to look at the broader markets, and we're also going to see where this rally is heading. Will it continue? Does it have the legs to push up further, or are we due for a correction? We're also going to take a look at investing in different economies. We started this discussion in the last podcast, and we're going to look further on how exactly you invest in an up or a down economy. I know a lot of folks out there are worried about this current rally that we're seeing in the S&P 500, and everyone is on pins and needles because they're just saying this rally may end at any point in time. And if you have your portfolio structured properly, it will minimize the effects of any decline in the markets. Okay, if you want a video to see a video of the podcast, you can go to smartinvestorcentral.com and you can see a video outlook of the podcast. It will be on the market update, so you can see the charts of what I'm speaking about. Okay, moving on. So the S&P 500 at this point in time, it's up 2.10%. The Nasdaq is up 11.17%, and the Dow is up 0.25%. Over in the UK, the FTSE is down 0.11%. The Nikkei in Japan is up 0.47%. And the Shanghai index was down 0.35%. Now, looking at a chart of the S&P 500, we see that the market briefly leapt to a new high for today. And the market is coming up on the critical 2,560 level for the S&P 500. As you can see, the last couple of days was we had very narrow price action in the market, and we're seeing signs of a short-term exhaustion point. That doesn't mean the market will turn around and collapse tomorrow. We're seeing some signs on these indicators of a short-term slowdown or short-term pullback could be on the cards for the market. So just keep that in mind. Looking at the Dow Jones Industrial Average to new highs. The chart of the Dow is much more healthy than the chart of the S&P 500. And looking on the Dow, we don't really see evidence of any decline or any short-term correction. So we're kind of getting conflicting signals here. Looking at the US dollar, the US dollar index is unchanged on the day after being up. Oh, it just returned back up. Okay, so the US dollar index is up on the day, and the US dollar index is bouncing from a very important support point around that 92 level on the US dollar index. We see that the market briefly went below that level and is coming back up, and that signals to me that we could, or I said it a couple of weeks ago, we were at a short-term bottom in the US dollar. Now, a short-term bottom can become a longer-term bottom if we start to see the market advance further above 94 and above 96. Looking at the gold market, we see that gold was up on the day. It has pulled back in the last hour or so, and gold is trying to challenge that 1320 level. Currently it's down about $3 or down 0.26%. We're seeing gold down. And what we're looking for in gold is, firstly, the market would have to challenge that 1320 level, and then the market will try and challenge the 1360 point. Just in the last couple of minutes, we also saw another tick down in gold, and down. It's down, still down 0.26%. The market to look at is the crude oil market, and this market could drive a lot of the other commodities. And we see that oil is up 0.97%. There was some major flare ups in the Middle East, over in Iraq, and we saw oil spiking on the news this morning, and the rally has endured ever since. And crude oil needs to close above that $55 level for further gains to be seen. That will give the bulls more momentum if we see the markets close above that $55 level. Okay, so that is it in terms of oil. Now, a market that is up fairly significantly today is the copper market. And over the last couple of weeks, where we have been seeing copper really rise, and it's up some 3.33 percentage points today, and it's really soaring to a new high for the year. Actually, the last time we saw this price in copper was back in 2014. So the market is really rallying, and this is an example of something that I encourage investors to diversify their portfolio. By You can enter copper by via ETF or via the futures market. It's good to have a diversified portfolio for your investing, and this is a market that has seen some good bull moves over the last couple of months. So copper is really moving to the upside, and it really goes into the broader point about investing in any economic environment, because the myth out there amongst investors is that you need a good economy to make money with your portfolio. I guess that's what the mainstream financial advisors tell folks, and nothing could be further from the truth. If a proper portfolio is structured to make gains in bull as well as bear market conditions, and the simplicity of it is lost on definitely on a lot of financial advisors, that they just can't wrap their head around making money in a down economy or a down market, because they're singular focus. Most financial advisors would say get in stocks and hold them for the long term, and that is it. And if you follow that advice, when the bull market, like what we're having now, comes around, everyone will do well. Everybody, unless you're not really picking good stocks, everybody will make money in a bull market following that advice. But the thing is, when the market turns around, what will you do? And I advocate that following a market-led approach will allow you to make gains in bull and bear markets. And a market-led approach simply follows what is trending and follow what the market is giving you as a profitable opportunity. For example, right now, you can see, other than stocks, the S&P 500 is clearly in a bull mode. We see that copper is trending to the upside. We see that the gold market, after being down for a number of years, looks like it wants to trend to the upside. The broader trend in gold is to the upside from 2016, where the market 2015, where the market bottomed out. We see that gold bottomed in 2015 and has been steadily moving upwards. And that is a market-led approach. You diversify your portfolio in different asset classes and look for profitable opportunities in different asset classes. If you want more information about a market-led approach, you can go to smartinvestorcentral.com, and you can sign up for the free report on how to achieve gains in any economic environment. using the market-led approach. The market-led approach is not spoken about by the mainstream investors. It's not really spoken about on CNBC. You rarely hear about something like that, but it is the most profitable avenue I have ever seen to navigate these markets in any economic environment. So check that out, smartinvestorcentral.com. Thank you very much for listening to the podcast. Just some notes. We are coming to you daily now with the podcast. The podcast has been getting a lot of good feedback, and folks have been clamoring for a daily edition of the podcast. So we are coming to you now daily in the podcast. We record the podcast around just after midday, and we'll get it out to you as soon as the recording is available. So subscribe to the podcast. You can also watch the podcast on YouTube. You can go to smartinvestorcentral.com. You can see the charts that we're speaking about, etc. So we have some exciting times in the days ahead. Thank you very much for listening. My name is Beyond Dale, and I will see you again tomorrow.